Okay, 19th of February, Rudy here. Welcome to the Daily Investment Show, where we go through ASX US indices and sectors and commodity prices, looking for where we should be investing our money. And got a special one for you today. Not that every day isn't special. Okay, so ASX 300. We're still under the dome. We're right at all-time highs here. So we've got to look at our two big sectors to see if we can break through. Okay, so we've got the XFJ. XFJ has broken through the dome, so that's very bullish. Now if we look at like who's adding or subtracting to the index, so if we look at the XFJ over the ASX 300, so when it's going up, it means financials is adding to the ASX 300. So you can see these are weekly charts. It's been adding. But we're at a pretty interesting sort of, this is going back since 2008. So here it detracted from the index. So we're at this sort of interesting relationship between financials and the ASX 300. So we're going to need the financials to punch through. So it's sort of coming down to, will this guy, Commonwealth Bank, is he going to punch through or not? And the other big sector is the material sector. So I'm pretty confident the material sector is going to keep making new highs. If we look at the materials, the material sector to the ASX 300, so it's adding. So this is adding value, that's detracting value. So at the moment, it's adding value to the ASX 300. So that will continue. So we need the financials. One I'm pretty keen on at the moment, the energy sector. XCJ, lovely rounded bottom within a big rounded bottom. If we compare the energy sector to the XKO or ASX 300, so it's not a huge part of the ASX 300, so it's not going to do much lifting, but it's interesting that we're forming a bit of a bottoming pattern for energy to perform the general share market. Our gold index, so they're just chilling. I don't think they're going to crash. The gold index over financials, so you get 130% outperformance over the last 12 months. So you got real banks versus fake banks. Our tech sector is having a bounce. Looks like it's found a bottom. It deserves to. It's been hammered pretty much. So I think there's some good buying ops there. $10 a month. Join the channel. We go through specific ASX US shares, ETFs to buy. Okay, our property sector, property XPJ. So we got the rounded dome. So this is pretty sick, really. So high interest rates don't help this sector at all. It's not a big part of, it's only 6% of the index, but again, it's not going to add value. The healthcare sector. So that's CSL trying to find a bottom here. Okay, America. Okay, so America's looks like it's found some support here. It's driven by this everyone's short. The put call ratio, so everyone's short at the moment, so that's going to provide support to the American share market. So that, if anything, that looked pretty bullish. The Nasdaq, so same, it's on support. Oh yeah, this is a new one for you. I think with a lot of investing, there's this. Actually, I saw a video today about this. Oh, you got to invest outside Australia. That's not the most important decision. The most important decision is like what sector. And so this is the NASDAQ over the ASX 300. So if, like in 2009, you had to just put nothing in, switched all your Australian shares to the NASDAQ, well, 670%. So that's where you want to be, but that's hindsight, and that's not where you want to be. But that's what you want to get right. Who cares what country you're in? Anyway, hope that was informative for you. Okay, the MAGs, so the Magnificent Seven, so they're having, looks like they're going to have a bit of a bounce. The S&P 500 over the NASDAQ. So you've still got the non-tech stocks doing the lifting in the S&P. Again, if you our materials sector over the S&P 500, so you want to be invested in our materials sector. We'll have a look at Amazon's having a bounce. Nvidia just chilling. American financials, so they're sitting on support. The energy sector, XLE over in America, so that's another sector who's extremely short at the moment, so that's going to cop a bit of short covering. My favourite girlfriend ETF is this one here, involved in that space. Join the channel, find out who she is. If we look at the energy over the S&P 500, so we've got the energy sector outperforming the S&P 500. Gold miners over in America, they're looking good. The gold miners over the S&P 500, so again, gold miners are outperforming the S&P 500. The midcaps in America, so they're doing quite well. The midcaps over the S&P 500, so S&P is leading the tech and the midcaps is leading the S&P 500. Okay, your super fund, or the VDHG, which is basically your super fund. And one of my pet, if you had a materials focus in your, you can do it in Host Plus, Australian Super, or anything really. A materials focus, you'd since July, your super fund would be 30% up, and this is a current share that you can get in Oz Super, which is one that's ready to rip. Join the channel, $10 a month. VGS, the old popular VGS, same materials over VGS, you'd be up 40% if you got out of VGS. Okay, interest rates, so Aussie 1 year rates are back on the climb. Same with the Aussie 10 year rates. So you can see here there's a big, there's the lows down here, COVID. So the general trend is up for interest rates. I did a few fix your mortgage of about 6 months ago. Okay, US 1 year rates. So the other day they were looking like going down, and now you might, well, it needs to break these levels here to confirm a new high is being made. But we'll get on to this. Is this inflation? People thinking inflation is coming through the pipe. The US dollar, so that looks pretty strong actually. We did have this bullish pin bar here, and a bit of a declining channel break, so that's looks like it's a buy on the US dollar. The Aussie dollar, so we're looking a bit stretched up there. Good time to send some money to America, I think. The commodity index. So this is a new one for people who are just watching the public one. The commodity index made up of energy, agriculture, so everything, livestock. So this is this beautiful pattern showing the multi-decade long breakout about to occur. This is this commodity index over the Nasdaq. Okay, so again, you wanted to be in the Nasdaq, not in commodities at all. But this tide is turning where commodities is going to be outperforming Nasdaq, so that's where you should be positioning. Gold. So gold's got its little dome here. It needs to break through to confirm it's going on with it. Gold. So the gold miners over the gold price. So I'm expecting good things from the gold miners. Aussie dollar gold. So we're just chilling. A drop in that Aussie dollar will be a bit more oomph for this. Bitcoin. So Bitcoin's trying to eke out a bottom. Silver. Oh yeah. So we'll just look at the. Before we get onto the price, there's some interesting stuff going on with how much silver's in the vaults. So I've been keeping a record because they delete it each day basically. So what we're looking at here is open interest. So this is on the futures. How many contracts are open on the futures market? So as of today, so just to prove you I'm not making it up, the CME group. So there's 131,000 contracts. That's open contracts, and they're 5,000 ounces each. So that's 657 million ounces in paper claims, and in the vaults. So this is CME group. So in case if you didn't know, so there's two categories: registered and eligible. Registered is what's available to cover contracts. Eligible is what is in the vaults, but it's been taken, like it's ETFs have got their claim on it, or high net worth people. So you can see, so 3 million, this is a daily report, 3 million went from eligible to registered. So what does all that mean, Rudy? So you can see here, so on the 17th of January, there was 123 million in registered, and now there's 89. So there's basically 7 times the amount of paper claims over what's available. So that's one of the bullish setup for silver, which looks beautiful. Okay, get on with it. Platinum, just chilling. Palladium, just chilling. Copper, we'll go to a weekly chart. So copper's just consolidating. Oil, giddy up, giddy up, giddy up. I hope you've got your energy stocks. So here's that US oil over the S&P 500. Is that why interest rates are going up? Natural gas prices back at support. Iron ore looks pretty sick. Like that's coming down. Lithium having a bit of a consolidation. Uranium finding support. We got thermal coal breaking out. Met coal, coking coal, coke breaking out. Nickel finding support. There's an ETF you can buy here. Recent recommendation to get exposure to nickel miners. Aluminium price consolidating. Tin doing a bit of consolidation. And then this is a new one for you. They've got wheat prices. So wheat prices have been hammered. So they look pretty bullish. So get yourself some exposure to wheat. Alright, that's your daily wrap. See ya.